A market melt up. Wow, I wish I could come up with a phrase like that. Hi, this is Dean Jenkins from followmetrades.com, and this is the market update for the week coming up of February 13th, 2017. So that phrase, market melt up, it's not an original from me. Again, I wish I could come up with phrases like that. That's awesome. But that's a headline from Barron's from writer Kopin Tan here. And Kopin's headline is "The Aging Markets Melt Up Continues." That's awesome. Now Kopin goes on to make a couple of really good points here. Love this picture of the bull there in New York. Kopin makes the point that as age-defying stunts go, our mature bull market has gone 84 sessions and counting without a single daily decline of 1% or more. That's pretty amazing. It's definitely amazing, and let's put it into some context. I went looking. Here's Merrill Lynch says this is the second longest bull market ever, and Merrill Lynch is saying it's got farther to run. They could be right. I don't know. Let's go back to the chart and look at this. Merrill Lynch is saying, I'm sure it's based on data, that the longest bull run was from 1987 until 2000, and then we had, of course, the dot-com crash. Right, and they're saying this is the second longest bull run in recorded history. That's pretty impressive. Started in '09, and the market was down about 6,000. It's up at just over 20,000, up over 300% since this bull market began. I love scanning through headlines and just seeing what the various writers for the financial press are saying. And here's CNBC. And says with the bears starting to give up, the market has opportunity to go higher, according to some expert. And here's Market Watch, and it says the stock market's Trump rally has just begun. Just begun. Okay. Let's jump back to Kopin's article here about the aging market melt-up. Kopin's got a great turn of the phrase here. And again, I wish I was this clever to come up with these kind of headlines. Kopin says, notwithstanding an onslaught of executive orders, nationwide protest, constitutional confrontation, disquieting headlines, fake news, alternative facts, and the crippling embarrassment that are the New York Knicks. Apparently, Kopin's from New York. I don't know that story here. Good point being made that despite some things that would cause a bit of pause in the market, it's rallying. The latest rally from Thursday and Friday was the press release that the administration is planning to release some information on the tax cut plan, both corporate and personal, next week. That's awesome. I think a tax cut's good news. I think that's good for the economy. But a press release or from the White House on tax cut proposals is not legislation from Congress, right? So interesting that the market would rally on that news. It is yet to become reality. If you've been following my updates for a while, you know that I think we're near the top of this bull market. It's been impressive. It's been awesome. And it's still awesome. And we're still long lots of trades. And we're still making good money on those trades. And we intend to stay long as the indicators tell us to stay long. But we also have a basis in reality in knowing we can't go on forever. And we are prepared and we are paying attention for when it does show evidence of turning down. And if you recall the chart, the monthly chart here, when the market goes down and turns down into a correction, it goes down much more quickly, much more dramatically than it goes up. So we're riding this wave up, and we're profiting from it, but we're also paying attention. And we don't want to be that guy who gets in at the very top of the market long and then gets burned, right? We're making money on the way up. We're being very careful with risk control. We're only taking the very best trades, and we're watching closely. And when it turns down, there's going to be a lot of profit to be made. And we'll be there. It won't happen in a day. It won't happen even in a couple days. We'll have time. We'll have warning. We've got tools to measure it. And when it does happen, we'll be ready and we'll profit from it. So again, if you've been following me for a while, you know I've been saying, there's a correction coming someday. That doesn't mean I'm a pessimist or apocalyptic. I'm just a realist. But meanwhile, I'm not ignoring the realities. I'm long and going with the flow of the market. Here's the trade we're in right now. It's MO. We got long on MO at $67. Even when I think there's a correction coming, right? I'm taking trades according to the reality of the market. So here we are in MO. We got it at $67. We're up at 72.42. We think there's a target of 74.88 or more. And I've got my stop above my entry. We've got profit locked in on this. So I'm trading the realities of the market, and that's a good example. In addition to this one's a little late, so it's a little late to get into MO and get some of the profit. But I've got six trades that do have great entries. Most of them are long, a few are short. Six trades that have great entries and great potential. If you'd like to see those, you can take a trial subscription to my stock pick service and sign up and see them right now. And there's a link that you can click and get in on that. So I encourage you, if you're interested, if you like these kind of trades, check it out. So that's what's going on in the stock market. It's going up, right? It's up. Dow's up through 20,000. It's still heading up. It's over that. And the bull market is continuing, and we're trading the realities of that. Someday it'll turn around. We'll trade the realities of that too. Let's go take a look at gold and oil to wrap this update up. So here's the gold futures daily chart. I've been saying for over a month now that I thought gold found a bottom, was heading up. We traded this leg, we got out, and we traded this leg, and I still think it's got a lot of room to go up. So I'm bullish on gold. I think it's heading up, even in the face of a rising indexes. I think gold's got some room to go up, and we're going to be taking some more trades on that. And we're still in a gold trade and a silver trade on our stock picks. Here's oil, the crude oil's futures chart on a daily interval. It's starting to break up above the cloud here. This is pretty exciting. We still want to see oil put in a new high up around 56.27, break through that with some momentum. If it does, we think there's a real rally starting in oil. The price of oil is predominantly based on supply and demand. There's currently tremendous inventory, historically high inventory levels, but major players, OPEC, non-OPEC like Russia, have agreed to production cuts to try and draw down the inventories, take price up, and early signs are they're actually, for the most part, sticking to those agreements, and that production is being cut back, inventories are being drawn down. So we'll see if that continues. That's fundamental data. It's important. It feeds into the reality on the chart here, what we're looking at, and we'll see what the realities show us in the future. And what we want to see in terms of reality is price getting above 56.27 with some momentum. If it does, we could be looking at $70 to $80 a barrel on oil. But that's got to prove itself. It's still very early. Well, that's the update for this week. We're still in a bull market. It's still heading up. It's still based on emotion more than fundamentals for sure, right? The price to earnings ratio on mid-cap, small-cap stocks are in the nosebleed section of the stadium, and earnings for the rest are kind of mixed. So the market may be overvalued. It may be driven primarily by emotion and by headlines coming out of the White House. Let's see what happens when reality sets in. It may continue up. We'll ride that up. We've got several trades. We're managing our risk, so when it does turn over, any losses we take are going to be small. We're capturing some good winners along the way, and then when it does turn down, it's going to be exciting. It's going to be profitable, and we're going to be there. So that's it. Thanks. We'll catch you next week. Trade safe, use risk control, keep your winners big and your losers small, and we'll be back next week with the next update. Thanks.